Eric Balchunas. I'm senior ETF analyst with Bloomberg Intelligence. Bloomberg Intelligence is a small department within bigger Bloomberg that is research. And so people do research on stocks and bonds and sectors and macro, and my team is ETFs and funds. So that's all we do. So obviously, any fun nerd out there has been following this for 7 years, since the Winklevoss filed coin, when Bitcoin was like $90, all through tomorrow, which would be the first one to trade. And the reason, I think for crypto people, like a lot of them would never buy the ETF, and that's fine. I mean, honestly, you just buy on your own. Just like an active manager would never buy a stock ETF, they'd buy the stocks themselves. That said, for a big chunk of the population, advisors, people who are just comfortable trading on major exchanges, an ETF really makes it easy. So it really opens up crypto to new audiences. I think that's ultimately the takeaway for anybody from the crypto world as to why this is important. And you could even say the ETF is not the best way to get access, yet probably have some appreciation for the audience it opens up for you.
Yeah, absolutely.
Major step forward. This particular ETF, it remains to be seen how popular a Bitcoin futures ETF is. That's what this is, versus a sort of Bitcoin ETF that holds Bitcoin, which we think would probably be a bigger instant hit and long-term hit. But either way, that's probably going to come later. So you just got to look at this as step one of a real long process of really opening up and bridging these two worlds, which ultimately for crypto will bring more money into it. And for people over here, will finally, allow them to get exposure in the format they like it.
So do you think this will immediately open the door? Grayscale announced they're going to convert their fund into, I think, a spot ETF, if I'm not mistaken.
Yes. So I don't know when or how they'll be able to do that ahead of the group of ETFs that are waiting to be approved by the SEC. So there's really got to think there's two races. I almost think this is like the Kentucky Derby. This futures Bitcoin race is sort of the preview. The main event is that race. It's who can come out with a physically backed spot Bitcoin ETF. The reason that race is on ice is because the SEC chairman doesn't like the legal the rule in which those are filed under. He prefers the 1940 Act, and the only way to really be under the 40 Act is the whole futures. So his preference for that is why we have futures first. But I would look at the futures as sort of a warm-up. Now, in order for Grayscale to convert, they'd have to convert to something under the 1933 Act, which Gary Gensler does not like. So I'm not sure how they would jump ahead of the ones already waiting, or convince Gary Gensler that all of a sudden the 33 Act is no big deal. So I don't know. They certainly should try, and I think the SEC should let them do it. I mean, that's my opinion, because there's investors sitting there underwater. I think GBTC has trailed Bitcoin by 170 percentage points over the past 12 months. So I think those investors should be made whole. I think some of them probably went in there not understanding the premiums and discounts, and I feel bad for some people in there. And now if they sell, they got to get hit with a tax bill. So I hope they allow that. I do. I just don't think they will anytime soon. I think that's my opinion on what they'll do, because that would be Gensler acknowledging the 33 Act's okay with him, and it's not.
Yeah, it seems his preference was out of he wanted to protect investors by basing it off something a little more smooth, the futures derivative market.
Well, I think the 40 Act just has a lot more investor protections. It's almost like rules that's like 25 rules, whereas 33 is like 4 rules. It's just got a lot more that you have to do, more hoops to jump through. There's an independent board on the fund. There's a whole bunch of stuff. Also, the futures market is regulated by the CTFC. So he has like a co-partner in regulation there. And I think it's more comfortable for him. It's more like I can sleep better at night knowing this is 40 Act stuff. That said, is this better for investors than an actual spot approved Bitcoin ETF? Probably not. So the unintended consequences, you're going to move people into basically a derivatives position. And the thing with an ETF that holds futures, there's many of them. they hold the front month, and as the month gets closer to expiration, they have to move to the next month, and then the next month, and that's called rolling. That's to maintain exposure. And so in order to do that, you tend to pay a little more for that next month out. That's called roll costs. So for futures, you end up over the course of a year, maybe paying, it depends on what area of futures. For oil, it could be 30% a year rolling. For the VIX, it could be 40%. Our analyst thinks that it'll be 5% for Bitcoin. It'll be like, that's what gold is. So it won't be that bad compared to those other areas, but 5% a year, that's a big, if I were to tell you that's the cost of getting exposure to spot, you'd be like, that's pretty hefty. So I think that's what you have to balance. That's why we think this product may not really penetrate the bigger advisor world, where they're going to put like grandma's money in it and have to answer questions about not tracking perfectly. I think where this will be a big hit, though, is the trader world. Retail traders, institutions. As soon as one of these gets some liquidity, you'll be able to trade in and out of Bitcoin effectively for 0.01%. It's almost free. And with commission-free trading on Schwab, that means anybody on Schwab or TD Ameritrade, wherever, they'll be able to trade Bitcoin now with no transaction fees. And the spread's totally minimal. And there'll be options on them. So you can do call options on Bitcoin. This is a big deal. So for the trading world, this really is a big deal. I think the spot Bitcoin ETF will be a bigger deal for the sort of more conservative buy and hold advisors. But baby steps.
So do you see a competing market of Bitcoin futures ETFs? Because I know, as soon as ProShares announced, Valkyrie in some way deployed a rule that they could skip the queue, and they're also going to file or go ahead and get theirs
We're going to try
trading. Yeah. So how does this play out? How many do we have 3 to 5 years down the line?
Yeah, it's gonna be crazy. My colleague in Hong Kong, Rebecca Sin, just did a note comparing it to the Squid Game, where you've got all these people whittled down to a couple, and that's probably true. The whole ETF industry is like a Squid Game. It's a brutal industry because unlike mutual funds, they don't pay any brokers. There's no distribution fees, so all the money you get into an ETF, you kind of have to earn. And so a lot of times, if an ETF is out and gets like volume, and people see that it's liquid, they'll start to flock to that, and then all of a sudden volume and assets beget more volume and assets. That's why you have inequality in an ETF category. So let's say 10 launch this year, probably 2 will have over half of all the volume and assets. And honestly, the ones that come out first have a huge advantage in that. So BITO, ProShares, is we already predicted where we think the assets will be. We think this one will have 1 to 2 billion. And that'll be half of all of it. We think Valkyrie has a good chance. Valkyrie filed 2 weeks or something after ProShares, but because they're a new issue where there's a loophole kind of thing where they feel like they can get special post effective, the SEC can grant them quicker. The SEC can make a new issue or post effective faster than 75 days if they want. So right now, Valkyrie is probably on the phone pitching the SEC to let them do this as a new issuer. Everyone else has to wait the 75 days. So that puts Invesco probably up next, unless Valkyrie can do this move. So, well, tomorrow though, it'll be all BITO. BITO, I'm not sure what to call it. BITO, we're still trying to figure that out. But I keep thinking of Beto O'Rourke, but that's a whole different thing. But anyway, that's gonna have the market to itself tomorrow, and that's big. It's probably gonna trade a couple 100 million, that's my guess. Next day it'll probably trade, and so it's got that 1 day lead can be a lot. Valkyrie, Invesco come in. We'll see how they can mix it up. Then you've got firms that are, the Invesco is connected to Galaxy. So some of these firms are connected to wide networks of people, and including in the crypto space, like Bitwise has one coming out. So it's possible that even if ProShares gets the volume and starts to get a lot of the assets and attention, you could have a Bitwise or an ARC coming out a month or 2 later. And because of their strength in branding, they might be able to move the needle and go against some of that natural laws of ETF physics, which say that the first to market usually is going to be the dominant one. So it'll be fascinating to watch all these play out. Not all of them can make it. There's just not going to be enough for everybody. So my guess is a quarter of them probably bite the dust within 3 years.
Interesting.
And then another quarter probably just barely hang on, and then another quarter live in the middle class, and then a quarter of them are like studs, which means like
Okay.
over, making money, profitable, and then one or two will be like, like liquidity kings, which is that's where you
Okay.
want to be. That's a good place to
Yeah.
be. That's like, and then at that, when you're have that much liquidity, you don't have to lower your expense ratio, your fee, because people just like the liquidity that much. But what we will see, speaking of fees, is probably over time, 95 bips is what ProShares is. I think Valkyrie's around there. You're going to see people undercut, and they're going to go, okay, I know that's liquid, but I'm going to sell to you for 40 bips, 40 base, 0.40%. So over the next couple months, you're probably going to see people compete on fees. So let me fast forward to 2-3 years from now. Where this is all headed is the same where it headed with stocks and bonds and ETFs, where you're going to be able to get a crypto basket of all of the cryptos in market cap weighted per percentage, in a physically backed form for probably 10 basis points. And it's going to be highly liquid to boot. That's going to be a big deal. And it'll be messy getting there, but that's ultimately where this is all headed. And that's what happened with stocks. The Vanguard Total Market Fund is called VTI, and it's 3 basis points. And you get access to 3,500 stocks, 99% of the market cap of the US stock market. And it trades $1 billion a day, and it's 3 basis points. So it's basically free exposure, both on the expense ratio and the trading fees. And you get the whole thing. So ultimately, every category has come out with pricey stuff, liquid, and then it ends up just whittling down to usually you got one that's really liquid, but a little more expensive fee-wise, and one that's semi-liquid, but very cheap. And I'm sure each category, whether it's the futures or the spot, will end up with 2 or 3 like that. So that's what I would look for. And that's pretty irresistible. If you're an advisor and you can get Bitcoin for 10 basis points a year and it tracks really well, and it's liquid and the bid-ask spread is basically non-existent, and it's in an SEC approved wrapper, and it can go into a retirement account. I mean, that's pretty powerful. And that's ultimately why this is a small step, but a big step. It's not BITO itself, it's what's coming.
So, what is your profile of like the ideal Bitcoin futures or spot ETF investor? What does this person look like? What do they do for a living? Why do they need this product?
Okay, so for all of the crypto crowd, I mean, some of them may be curious and invest in it, but I don't think this is for them. I think this is for a couple people. So take somebody who has a Schwab account, or is doing likes to trade options on Tesla. We'll call that the YOLO Zoomer trader person, the meme stock trader. They might take to this because they're used to trading stocks and options. That's their thing. The cryptos might not be their thing. They might not like, there's a little higher fees in trading those. That's one audience, in my opinion. Another audience is like, let's say you're a hedge fund, and look, you just need quick exposure to crypto for a month. It's a bet on inflation. I don't know. You could then easily just get fast, easy access to it. So small hedge funds that might not have, they just might be too lazy to go open a whole account and trade it directly. And then there's people who just like their stuff all kind of like nice together. So let's say you've got VTI for your total stock market, BND for total bonds, and now you've got BITO for your crypto. It's all 3 or 4 letter tickers trading on the same exchange, publicly traded. I don't know, there's a comfort to that. So that could be anybody. I mean, I think there's even potentially some advisors who would get over the futures rolling issue and buy it for that reason. But that'd be my target audience here. So I would look for institutions that need to do short maneuvers with Bitcoin, maybe, or let's say they think Bitcoin's going to go down. What they would do, instead of trying to find Bitcoin and short it, that they could buy put options on BITO. That's maybe a more measured way to be short Bitcoin or bet against it. A YOLO trader could buy call options on BITO and make a ton of money if it goes up. So it's really this ease of trading and the amount of creativity with the trading that this is going to open up. That's the main base here. If you ask me about a physically backed spot ETF, I would then shift to everybody. And I would even put like, my mom in there. That's how far a spot could go. But I think with the futures, we're mostly looking at the trader type. And I would think that's largely retail and then maybe some institutions. But again, there's institutions and hedge funds and some of these bigger professionals. They have access to everything and they don't necessarily always need the ETF, but what the ETF brings to them, and I've seen this time and again, that's why people still trade SPY, is liquidity. Something that trades $1 billion, 2, 3 billion a day is so attractive because they can get in and out without anybody noticing them. They will not move the market. The bid-ask spread is almost non-existent, so there's really no fee to trade it. They can do different things with it, and it doesn't ever. If some of them have rules about not being able to trade outside of the public markets, this wouldn't change. They'd be okay because this is a publicly traded equity essentially. BITO will show up just like SPY and MSFT. So the liquidity that one of these is going to get will be very powerful. It might even bring institutions in from other countries who want quick exposure. And again, they're pretty big size. They don't want to actually buy it until it gets some decent liquidity. So I would say that once the liquidity comes into this thing and it trades an average of $500 million a day, which could happen in the first couple months, and then it gets to $1 billion a day, that's going to be a very powerful thing. And you can't buy that. That has to be grown like a tree. You can bring assets in your fund, just call your friends and people if you're an issuer. We call that BYOA, where you bring your own assets and it makes it look like it's a success. But you cannot fake liquidity. That volume is natural, and if you get it, it's the greatest. And there's nothing that can really that will make this ETF have a lot more potency than some people I think are thinking out there. They're underrating the volume and the liquidity as a feature.
So what do you think about Bitcoin then? As an ETF guy.
It's a good question. I was asked this today. Somebody was like, "Oh, you're pumping crypto. How much crypto do you own, sir?" And everybody on Twitter is, you know how it goes. So look, I don't know. I don't know. Crypto fascinates me. When I sometimes think about its move from a currency to a store of value, that worries me a little. Wait, I thought the pitch was currency, now it's store of value. That bugged me out a little. On the flip side, when I hear people describe the metaverse and the idea that we're all sort of mentally going into the internet more and more, and this is like currency of the internet, or something that will be using the digital world, that's exciting. I can see it more. That's why it helped me understand NFTs, which seem absurd for a normal person. So I get it. I'm pretty bullish on it. I think, and a lot of smart people are involved. That's another thing. It's got a lot of really interesting thinkers and people who are very smart and tech oriented. I wouldn't bet against people like that. So it's got a lot going for it. Do I really understand it, or will it take down the dollar? I don't know. This is a bigger. I just don't know. My head's not. I don't have an answer on that yet. So I'm okay just saying I don't know on a lot of crypto questions.
I'll leave you with this. I think a good place to start is looking at the differences between Bitcoin and other cryptos, because the others are trading basically as securities issued by companies or small groups of people, and they don't insure the holders with any fundamental property rights. The rules can be changed arbitrarily. Bitcoin, interestingly, has no such danger. Like when you own Bitcoin, no one can take it from you. You're not subject to governance, basically, over your asset, if that makes sense. So
Yeah,
I just like to point out that difference.
I can see that being appealing. And Bitcoin just seems. And what is it? What percentage of the total crypto market cap is Bitcoin now? Like, is it like 80 or something?
See, I guess what I'm saying is, to my mind, it's 100%, because they're
Right. I see
completely
what you're
different
saying.
asset classes. It's not that I don't think that there's a competing
Yeah.
marketplace for cryptocurrencies. I think there's Bitcoin, and this survives and acts and will behave completely differently than the rest of these assets.
Understood. I think most people outside of the crypto world don't know that. I think they look at them all as like, um, you know,
Interchangeable kind of.
compete. Yeah, competing currencies. But that's interesting. I'll think about that more and keep that in mind. It's a
I
good
think
way to put it.
I think that's some of why Gary Gensler hesitates to open the floodgates is
Right.
because he used to teach blockchain technology at MIT, so he knows this stuff on a deep
Sure.
level. I think he's a Bitcoiner down at heart.
I do too. If you're teaching class at MIT, and I read some of that class lecture, he knows his stuff. He knows all the history.
Mhm.
That's why I thought he might be a little more bullish on the 33 Act. I'm a little surprised he wasn't more okay with that. But here we are. He's also a Democrat. They like regulation, right? So then I'm not totally surprised he likes the 40 Act with all its protections. But I agree with you. I think he knows a lot, and that would somewhat explain why he told the Ether people to get out of here. So Ether is not allowed to be in the futures group yet. Maybe down the road, but not now. Plus, that market's futures market is a good deal smaller, liquidity wise.
Mhm.
Anyway, it's interesting.
Yeah. Any final thoughts for today, Eric?
No, I think I would just if you're out there and you're in the crypto world, I think you just sort of look at this as sort of your world sort of going across a bridge into this other one, and just it might be just interesting to see how people respond to it. We will keep you up to date on how much volume and assets and how that compares to the Canadian launches, and try to give you context for how successful, based on our estimates, is it going above our estimates or below? And we'll cover that over the next couple of weeks, and the next week or two I think will tell us a lot about where this is going over the next year. So definitely stay tuned. But then this is going to keep growing and growing over time. So I feel like it's the end of the road because I've been covering the filings for 7 years, but it's actually the beginning, which is kind of like, but I'm so
Yeah.
exhausted that it's hard for me to say it's the beginning because I'm like, really? I just feel like, a little burnt out of covering it, but I'm also excited. It's revived a lot of my interest, and there's so much going on that it's added a lot of novelty to my job.